guess one of the things that comes up a lot about Perth is, 10 years ago, maybe not 10, maybe just 11 years, the prices of what have only just caught up to where they were 10 years ago. So we've been in a very, very declining market for quite a long time. Yeah. So it's a bit of a challenging one for people to say, how is it going to continue to grow? Like, where's the growth aspect of this?
Well, it's worth sliding on and comparing exactly where we're at for median house price. Let's go down past units. The unit market typically trails the housing market by 12 to 18 months. So let's chat about where Perth's at relative to the other capitals. Like, we're at 559,000 median value.
Yeah.
And you can see that Adelaide surged recently, Brisbane before that, Melbourne and Sydney before that. And Perth hasn't really had its catching up yet. Over the last, year, we've done 4%, but and this is just at the median level too. So in any capital city, including Perth, when you go deeper, there'll be suburbs that are doing 15, 20% at any one time. There'll be some suburbs that are going backwards. So this is just at the median level. Now, the reason that we've been pretty down for so long, and you can't say, oh, because the last 10 years has been that way, the next 10 are going to be that way. I'd actually throw that back at people and say, because the last 10 years has been pretty down, it's even more likely that the next 10 years is going to be stronger. Because when you're a migrant looking to come into Australia, or when you're a property investor looking for stronger yields and value, they're the strong reasons that are seeing a lot more buyers flock to Perth at the moment. And there's this concept in maths called mean reversion. I don't know if you guys have heard of that, where if something has underperformed for a period, it'll always kind of revert back to the mean. And
probably say may revert, because
may, exactly. Yeah, this is just a bit of a graph around inflation, and it shows that, because this is really driving a lot of things at the moment. And I found it interesting that Perth actually had one of the lowest inflations of each of the capitals, and that translates out to being more affordable to live here for the average basket of goods and services that are sampled in the CPI. And that's why the Reserve Bank's going so hard at trying to raise interest rates and, soften demand and pull us back into this target 2 to 3% range. And from chatting to buyers on the ground here, what I'm finding is every time there's an interest rate rise, there's still so much uncertainty, and that is one of the largest reasons that's holding back confidence. And I don't know if are you seeing that with the buyers you chat to as well, Joe? Or
yeah, I'm seeing a little bit of confidence across the board, where people are like, "Oh, is investing now the best time?" But also, I'm starting to see people get hit with interest rate finances. Oh, hey, I can borrow 450,000. Let's have a chat next month. Okay, great. Just spoke to my broker. I can only borrow 400 now, or 420, or whatever the number is. So they are actually, in real terms, when interest rates do rise, it does also affect your borrowing ability. So, if you can borrow
on the situation, you can be priced out of the market by rising interest rates, and you not be able to save as quick as the rates can take out your borrowing capacity. So, but look, we are starting to see that level out now, and it's worth going to the next slide and actually getting some perspective on interest rates, because here's our target cash rate going back in time to 1990, and you can see that we're still so relatively low compared to where we've been at. And it seems to have sort of hovered at this 5.5% mark. And we've been very low from, 2000 and 12 onwards. So we're really still getting used to getting what is normal and getting, we probably won't go back there because people's overall borrowing and other factors are probably a fair bit higher and they're more sensitive to rates. And it's looking like the RBA is starting to put the brakes on and slow the rises. And I think what's going to happen is once interest rates cap out and the whole market's confident that they've leveled out and they're stable, I think that's when you're going to see a lot more investors enter the market with more confidence. And I'm not just talking Perth, I'm talking across the board. And I feel like we've got this window where, if we get in and go forth and push through that, like we were talking about at the start of the webinar about, coming up against hurdles. So this is one of them. And I think if you push through, you can be rewarded. Well, the next slide is worth rounding out our chat on drivers, because what is really key as well is when you've got population growth, they have to live somewhere, don't they? And this was put together by Michael Matusik, very interesting, and he only just released this quite recently. So it's looking at the expected population growth based on current numbers and projections for each of the capitals. Then the housing demand as a result. So he works out based on this many people coming, if there was 1.9 to 2.1 people per dwelling, what does that equate to? And then he's looking at what's the dwelling approvals, like the supply and the pipeline, and then looking at the supply status and how many months of supply that actually is based on the population that's expected to come in, that we're already seeing come in. So this is what gives me a lot of confidence when I look at Perth compared to the other capitals. We've got just 2 months of supply to cater for this, ever-growing population. And our population is expected to be at 81 odd thousand, similar to Sydney and Melbourne and Brisbane there. When you look at Brisbane being 95, Melbourne 88,000 and Sydney's 86,000. So, but the difference is Sydney's got an oversupply of 18 months.
You know what that is? That's all those bloody Lego land places that they're building. So units in Sydney might be a little bit or new units. So building,
and as you say, it's definitely housing type dependent and area dependent. So, and scary for Melbourne there too, 25 months of supply. There's going to be some pain.
South Bank,
real pain ahead.
Building them to the sky.
And with this, sorry, I lost my question.
Things are tight. There's nowhere for people to live, and that's going to underpin prices and keep demand on both rentals and established properties, because they can't build them fast enough. And I think the biggest reason we're going to struggle to cater for this supply as well, but that the numbers doesn't tell you, is that because we were down for so long, the construction industry all scaled back to that lower level of demand.
And it takes a couple of years for it to ramp up.
That's what my next question was going to be around cost and prices for building new properties. What does that kind of look like?
I mean, anecdotally from chatting to all the builders that I know, we're seeing 30 to 40% increase in the previous cost. And that has to flow through to established properties. And it's another big reason why people are going to prefer to buy established over building the new, because, the premium is just too great on new at the moment still.
And
I don't think when the supply chains open up that they're really going to decrease their prices, do you?
Oh, they're definitely not. No. Prices
give someone a raise, lower a raise.
I don't see deflation. I just see probably maybe less inflation. in that sort of stuff. This should just to highlight probably some points and interested in this is maybe a free for all with Joe and Jarrad. In terms of looking at your Hobart and Darwin, whilst that number looks impressive, 2 and 0, I would sort of say there's a low number. There's no low number of population growth in both Hobart and Darwin. So, and even Canberra as well. Whilst that it looks like a massive oversupply, I think that's a lot of units in Canberra. So I think it's the devil really is in the detail. So it's kind of, but I tend to agree with Perth and even Adelaide and Brisbane. There's just doesn't seem to be a lot of supply and a lot of for the size of Adelaide is and the size of Brisbane is a lot of demand coming in. So, but yeah,
and you'd think that's going to underpin Brisbane, quite well. Just
I think Brisbane's starting to get a little bit unaffordable in pockets. Yeah, it is. But what do you think? Yeah, which throws even more to WA or Perth.
Super interesting. Okay, well, this has been foundational to understand Perth a little bit. I think it's given people a good bit of a insight. Maybe. Is there a better price point to buy in at Perth? Like that 335 price point might not be the best place to be going. If I've got 300,000, do I go to Perth, or what are your thoughts around the price point entry for an investor?
Well, that's a good cue up for the next slide, because the 3 months to June data is showing that the growth is moving down in the price points. So when you look in here, it's more now sort of getting in that 450 to 700 sort of bracket more so. So this is the 3 month change in some of these suburbs have done that in 3 months, and you take them with a grain of salt. And also, when I was preparing this data, I removed any suburbs that had low sales volume too, because you can't, the median price is not going to be an accurate change. So North Beach is still in there and Marmion's still in there. They're still rocketing on over the last 3 months. But then we've got some of these more, average family type suburbs like the Edgewaters, the Warwicks, the Careen, which is upper sort of working class, Bennett Springs and Shelley. So it's starting to drift down into the middle price points now is where the action's moving. So where would I be buying if I had an unlimited budget? Well, it all depends on your strategy, of course. So that's a open-ended question. But there's really good value still at, 500 to 700. You can get an amazing property here for that. If you go down in price points, you can still pick up something reasonable in sort of 450 to 500 here. Mm-hmm. If you're really starting out and just absolutely wanting to get into the market, then there's options below that. And how many other capitals would still have options? But, I'd be trying to spend at least 500 to 700 if you want like a really good quality, property that's sought after by home buyers.
Yeah. And that can afford you a half decent asset that has also value add potential to it. Like you can buy a nice sized block of land that can be subdivided.
I want to paint a picture on the next slide about what has actually happened for growth over the last 12 months, because listening to a lot of what we've said, you might think, nothing in Perth has really done anything, but here's a breakdown, and I just put all this data together today. I was crunching numbers and stuck in spreadsheets. But of the 76 Perth metro suburbs, you can see a breakdown here as to what growth there's been over the last 12 months to June. And REIWA's only published data to June, so that's why I haven't done to September yet. But you can see here pretty healthy growth among a huge number of suburbs. So 6 to 10%, 68 suburbs have grown by 6 to 10%. 88 suburbs have grown by 10 to 15% in the last 12 months. 43 suburbs between 15 and 20%, and we've had 10 suburbs grow by over 25%. Here's those 10 suburbs on the right. So wow. What this is also showing us with those suburbs is the majority of them are all higher price western suburbs or direct coastal, and that's where the majority of the action's been. And in the case of Hillman and Kungamia, you always have to look deeper as to, like, is this change like actually reflective, and is it? You can see that in the 5 years they've only done 17%, but they've grown in 1 year 31%.
Yeah, whereas the rest, except Leaderville,
yeah, like it's had a catch up, but it's still a crap suburb, you know, like. So don't just go chasing, you know, where you see strong change in median house price over 1 year. Like that doesn't.
What's going on in Guelph, North Beach, and Marmion? Because I can see that they've all far exceeded, well, not far exceeded, but they've close to exceeded their 5 year as well.
Yeah, just they're premium suburbs on the direct coast, and you know, lovely aspirational places to live, and people have just got the money and they're driving up prices in there. And
this is what we're talking about when it comes to the supply and demand of these type of suburbs, where people have no choice. If you want to live in these super nice pockets, you've got to spend more. So Medina is looking very interesting. 5.9% growth over the last 30 years.
Yeah.
And also is only 289,000.
Yeah.
And it's got a 6% yield.
Yeah. So look,
that's a real Medina, because that's one that's, I mean, Rockingham stands out a little bit as well, but I know Medina is quite close to Kowina. So I'm butchering the name of that, but
Kwinana.
Banana Kwinana.
But what's the thesis behind Medina? Obviously, it looks at all those metrics, but what's the on the ground? What are you sort of seeing there with those? And
can you point out where some of these locations are? Because I feel like it gives a bit more clarity around.
Yeah.
Oh, okay. So yeah. So where is Medina, for instance?
So Medina's down halfway to Rockingham. So go on the next slide down, and it's. So let that load for us. See Kwinana Town Centre there? It's right in there. So they've done 10 to 15 odd % in the last year, according to the chart, and that's where it is in there.
Okay. And what about some of the other hotspots?
So Heathridge is a north coastal one, which is really undervalued, I feel, still compared to its surrounding suburbs. So that's sort of just up north of Hillary's, just inner of up there. And Marangaroo's, we did mention Rockingham. I fully support Rockingham, because what's happened with Rockingham is that see how it's had relative low growth on the legend there, and I'm predicting that as a ripple effect, because long term it's had very good average annual growth rate, but it has not been the flavour of all these investors that are coming in, and now they're looking at it and seeing value, and I expect that that's going to do very well.
Definitely.
Canning Vale is out here, and you can see that that's lighter blue too. So it hasn't, relatively speaking, look at all the suburbs around it. They've all done relatively well. Canning Vale's getting 2 new train stations. And
do people catch the train in Perth?
Yep.
Yeah, that was a question.
Yeah, they do. So that's really going to open that up transport-wise. And the other benefit of Canning Vale is it's got really good primary schools. So that's going to underpin the home buyer appeal in there.
The one that interests me though is you got next door, you got Gosnells, which has done well, but there's a purple suburb in there. What's that purple patch next to Ronnie Selgrove as well?
Oakford has a lot of land there.
Okay.
I think next to Selgrove, that's probably Camillo, which has got a really bad stigma attached to it. So, you know, I always we have a joke around in the office, if someone's going into Camillo, we don't manage, I probably only manage 1 or 2 properties there reluctantly for owners that have got, you know, portfolios, and we've agreed to take it because they've got better properties in other areas. We tell people when we're going into Camillo in case we don't come out.
Jeez.
It can get rough.
Buddy system.
Yep.
Check in, check. Life check. Okay.
Civil Grove, similarly, Civil Grove and Marangaroo are just real good sort of blue collar. Civil Grove's out the way of towards yeah, it's just there. I feel like it's still relative value compared to its longer term growth rate, and I'd certainly be buying in there compared to Camillo or Gosnells or Armidale. That would be my pick out that way.
Yeah, you hear a lot about Armidale. People bang on about Armidale.
Yeah. Look, it's got a lot of Homes West and it's lower socioeconomic. So, you know, there's also a lot of land supply sort of still in there to be released.
Yeah. Okay. There you go.
So I love what you've done here, because this is like, if I had so what you're saying here is, if I had 300,000, I'd buy.
Yeah.
Yeah. If I had 500,000, I'd be considering Marangaroo and Rockingham and Heathridge. If I had 700,000, I'd be going Caning, Scarborough. What about Fremantle? Did that make?
Fremantle's definitely in there, but it's higher priced. I think. Yeah.
Okay.
And
here we go.
I really love Mount Hawthorn because it's got there's a relatively new public high school called Bob Hawke, and it's brand new in Subiaco, and it's very popular and driving prices in Mount Hawthorn, Wembley, and Subiaco. So that's why I'm particularly in favour of Mount Hawthorn as a suburb. It's got cafe strips, lovely spot.